Good morning and welcome to ATFX RBA preview coming to you live from sunny Sydney. Right, well, we have basically about 3.5 hours before the RBA delivers its latest update on interest rates here in Australia, and they are widely anticipated to keep them steady at 4.35%. Now, there's a couple of reasons for that. We've actually seen the economy start to slow considerably here in Australia. But inflation and the jobs market remains high and tight. And because of that, we're firmly, and I think every economist nearly on the planet is anticipating that we will see no change from them. But the interest is going to come from where we hear from Michelle Bullock and her team, and given where they give us a bit of a forward guidance. Now, there has been a hawkish bias from them for the last few, and I think this is the fifth time that they will keep rates on hold, if indeed they do. And what we're expecting to see is from the if there's any change in guidance, we will see some moves in the market and particularly in the Aussie dollar. So I've just whipped over to my Aussie dollar screen here, and as you can see, the Australian dollar has been trading in relatively tight ranges really for the last couple of months. If you'd have been trading 66 cents and 67 cents and sort of if you had an option halfway in the middle of that, you'd have been doing very, very well because it has been trading, but it is squeezing into this sort of like pennant flag shape. Now, support is coming in, as you can see. This is the longer term chart, much lower down, around 64 cents. On this longer daily chart, we've got 65.50-ish or 65.47 to be exact for that 200-day moving average. So there are some interesting technical levels coming up. Now, what most of the traders that will be looking at the market today for trading for today's market, they'll be looking at these hourly charts. And as you can see, we've had a nice little bounce off of recent lows, just under 66 figures. You get this a lot in the Aussie when there's a lot of options interest out there. And what we'll be looking for when it comes to this release is let's be honest, it's near enough guaranteed to be no change. It will stay at 4.35%. It will be what we get from the statement and what we get from the press conference after. So expect two opportunities to trade this today. One on the statement, and two, an hour later, which I think comes 3:30 afternoon here in Sydney, when we hear from Michelle Bullock. She's obviously going to be talking to the press, and that tends to get a little bit more insight in how the RBA is thinking. From a technical perspective, the target to the downside, now, as I said, expectation is and has been from the RBA that they are going to remain with a slight hawkish bias, which should see a little bit of a movement back to the top side. If that does not come through, and if they do move a little bit to the dovish side of things, and there's probably a slimmer possibility of that given recent inflation updates. But also, we are, as I said, we are seeing the economy slowing, and there is, as you're hearing across the world, sort of like a cost of living crisis, and they're talking about it a lot in Australia. And we've had tax cuts to counter that by the government. So whether the RBA jumps on board, probably won't at this stage, to be honest. But that does threaten this downside, right? So support comes in here. This is a support trend line. As you can see, that's coming in around 65.87. I'd take it down to this low, 65.83. And as you can see, we've got a few lows here just over the last week or so. So that's probably the target on the downside. We're sitting just around that 200-day moving average on the top side, but then it does stretch back up to just south of 67 cents for really your main resistance level. And I would expect, given the recent moves in the US dollar, that there will be sellers coming in around those areas. If that changes, of course, we could see the market then break into higher levels. So good luck with your trading out there today. Anything away from that 4.35%, if there is a cut, it will crash. If there is a hike, it will fly to the top side. All money is on there being no change, but if there is a change in that forward guidance, if it leans to the more hawkish side, expect us to drift up towards these 66.80, 67 levels. If we do get a surprise, and I can't reiterate enough, it will be a surprise on the dovish side of things that they could cut rates sooner rather than expected, and we're still looking at probably early 2025 for that first cut. Then expect these support levels to break, and it will take us down into fresh ranges, and then you're going to be looking back to those levels that we saw on the longer term chart. So good luck today out there, and if you need anything from ATFX, please do contact us.